I want to get you set for the trading day. We have U.S. stock index futures pointing to a higher open. In the last week, we've seen the Dow, the Nasdaq, the S&P all hitting records. Yesterday, the Dow had its turn. Dave Mazza, CEO Roundhill Investments, joining me now to give us your thoughts on the market. Yesterday was Fed Day. How are you interpreting that and taking it forward? Are you surprised to see up arrows today? Is it what you expected?
Yeah, no, I'm not surprised at all. I think yesterday the market was sort of absorbing what was noted as a risk management cut, but we got our first rate cut. So I think firmly we know that the FOMC is now in a rate cutting cycle. What's interesting, though, is that the divergence, of course, in opinions of the voting members. We know that some folks are dissenting, wanting a 50 basis point rate cut, probably looking for a lot more than that, actually. And then others are still concerned about inflation. So the Federal Reserve is in a tough spot here, trying to navigate through kind of some slowing in the jobs data. Today's claims much better than what we've seen recently, plus the inflationary pressures. But net, this rate cut is a positive for risk assets.
You talked about how the S&P has climbed since the lows of October 22. We've been in a bull market. October will celebrate 3 years. Do we go into 4 years? What are you watching?
Yeah, so we actually recently did a study looking at bull markets historically to try to get a sense of sort of outside of risks and outside of fundamentals, just simply does this bull market have legs? And actually, historically, it does. What's interesting, though, is that this particular bull market, and we are, to your point, sort of coming up on 3 years, it's been significantly more volatile to kind of make those gains than historical bull markets. So our expectation actually is because of the spending on AI, because of the robustness of earnings, even with some of the economic headwinds out there, is that actually we can continue to see the momentum building higher for markets, but we expect it to remain, as we have seen, kind of a choppy path forward.
So we think about names like the Mag 7, which have continued to hit new highs. We've seen that even this week. What do you think about that group? Do you wait for pullbacks? Do you get in? Do you buy that group?
Yeah, so the Magnificent Seven stocks, there was significant selling pressure, which started sort of with the DeepSeek news in February, and then, of course, the Liberation Day sell-off. But since then, they've really powered back significantly. And the reason being is that that group remains the revenue driver, the profit driver, and earnings driver for the broader market. Coupled with sort of the momentum that we're seeing with hyperscalers, with AI spending, we continue to think that that group's actually going to be a leadership area. Doesn't mean other stocks can't do well, but I do think investors will continue to gravitate toward the Magnificent Seven stocks in the spirit of that we remain in a winner-take-all environment. We're actually now at a place where NVIDIA can invest in Intel $5 billion to sort of help boost that company. It shows the kind of power that those companies have. We do not think this is a 2000 tech bubble redo. The spending actually is being done in really productive areas, and we're just at kind of the early stages of that. So while I do think it's healthy to see some broadening in markets, I think the Magnificent Seven can continue to be an area of seeing gains.
Do any of the names excite you right now? I'm looking at Tesla, NVIDIA, Microsoft, Meta. Each one has its own story. We see Intel soaring today. Do any of these names excite you now as an investor or as a trader?
Yeah, well, it's interesting. I think let's start with Tesla, actually, because that's a stock that sort of so much bad news was priced into it. We know the challenges that they've had with their core EV business, but now Musk is firmly back. He spent $1 billion buying shares to kind of prove that he's back, prove that Tesla's the area that he wants to focus on. And what they're beginning to do to transition that company from simply being selling EVs to sort of the whether it's autonomous driving, then now thinking about humanoid robotics with Optimus and other areas, is why that name's sort of now being propelled higher again. And so to your point, I actually think each of the stories in the Magnificent Seven and other stocks, whether we can include Broadcom or even Oracle to some extent in there, have sort of their own pros and maybe to some extent cons. Each one of them actually is providing sort of a different utility for customers and then for investors to take advantage of.
Yeah, I mean, I heard Elon Musk talking about, or I read that he was talking about that 80% of the revenue could come from the Optimus robots, humanoid robots. So Tesla, not just an EV car company. We've always said this because it trades more like a tech stock than a car stock. How about small caps? Is that an area that you like, have liked, will like?
Yeah, what's interesting, I think small caps have had a few challenges. Some is simply revenue. They have not been able, particularly because of the macroeconomic environment we find ourselves in, really been able to see consistent revenue, consistent earnings growth. There's also been this overhang of the debt that the Russell 2000 small caps have. And so the rate cuts on that front, and we've seen this, right? One of the reasons why small caps started rallying again is because people were beginning to price in yesterday's rate cut. So I do think that the lower rate environment is going to help small caps. My concern there for a longer term trade is that until we see actually positive earnings revisions and some momentum there, it's challenging for me to see that be a longer term leadership group. But there's going to be some great opportunities to trade in and out of small caps, really kind of simply based on the rate environment. And so I still think we remain in a place where large caps and mega caps are continuing to propel the market higher. But because we're going to have the market beginning to price in more rate cuts, really helping the debt burden that many small cap companies have, that's going to actually help position them for better growth going forward, particularly if we get into an environment where even if the economy isn't growing at a gangbusters pace, it's growing at a steady enough pace where the smaller cap companies can actually do well.
All right, Dave Mazza. Well, it sounds like you see some more up arrows ahead, and we will watch for that. Dave Mazza, Round Hill Investments. Thanks for an exciting chat today before the opening bell.